Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on December 2021 inflation numbers and its implication on your investments. The National Bureau of Statistics published Nigeria's December 2021 inflation numbers last week. Inflation measures the general increase in consumer prices over a period of time. After 8 months of consecutive decline, the inflation rate rose to 15.63% year-on-year from 15.4% year-on-year in November 2021. The year-on-year data measures price changes between December 2021 and the corresponding period of 2020. This brings the average inflation rate in 2021 to 16.98% year-on-year, the highest annual average inflation rate reported since consumer price index was rebased in 2009. Monitoring inflation is crucial for investors because inflation can reduce the real value of investment returns, which must be avoided. Hence, we will compare the inflation rates with fixed income rates. The rise in headline inflation can be attributed to both increases in the core and the food inflation sub-indexes. We link the rise in headline inflation to some of these factors. The core inflation sub-index, which was impacted by higher energy, housing, and water prices, rose to 11.07% year-on-year in December 2021. This is the highest since June 2017, bolstered by the rise in the pricing of cooking gas. 12.5 kg cylinder of cooking gas was up 76.49% year-on-year. The food inflation sub-index rose to 17.34% year-on-year and 2.19% month-on-month, the highest level since June 2017. This was on the back of huge demand during the festive season and insecurity in the food-producing areas, as 15 states recorded higher inflation rates in December 2021. The headline inflation was also impacted by the faster increase in imported food inflation to 17.34% year-on-year in December 2020, the highest since April 2017. This can be linked to the 8.1% adjustment in the official exchange rate from 379 naira 50 kobo to a dollar in December 2020 to 413 naira 64 kobo to a dollar in December 2021. Higher cost of doing business due to infrastructure bottlenecks. By states, Ebonyi, Kogi, and Bauchi recorded the highest inflation rates at 18.71%, 18.37%, and 17.81% year-on-year respectively, while Kwara, Edo, and Cross River recorded the lowest with 12.37%, 13.46%, and 13.93% respectively. Going into 2022, we expect several pressure points on inflation, which include potential removal of petroleum subsidy, though unlikely due to the upcoming election, newly introduced taxes, adjustment in FX, implementation of cost-reflective tariff, election spending, and continued insecurity in food-producing areas. What do these numbers mean for investors? Average Treasury bills yield closed at 4.1% on Friday, implying a negative real return of 11.53% based on the current inflation rate. While you are unable to receive investment return above inflation, it's better than keeping too much idle funds in your savings and current accounts, especially for short-term purposes. We would recommend more investment in commercial paper than Treasury bills to further reduce the impact due to the higher yield. You should also consider investing in dollar-denominated mutual funds or euro bonds to hedge against the impact of devaluation. Kindly listen to our episodes on investment in commercial papers and investment in dollar-denominated assets on the YouTube channel for more details. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.